All right, so we've now dealt with business combinations, okay? So responding obviously to some of your queries, dealt with that. Now let's get back on track with regards to consolidations. Now, you remember in the previous DVD, I dealt with consolidations from a perspective of, intercompany transactions, dealing with goodwill, all that sort of stuff. All right, so very much a basics introduction to your consolidation. We went through that one particular question, so that's fine. Now what I want to do is actually deal with changes in degrees of control. Okay, so what happens when I, for example, buy more shares in a subsidiary? What happens when I sell some shares in a subsidiary? Each case, all right, remaining a subsidiary. What happens though when I go from a subsidiary to an associate? What happens when I have a rights issue in the subsidiary? Okay, all of those types of aspects I want to deal with now. All right, DIPAC students, again, looking at the TUT data, it seems to indicate that you need to know all of this, all right, which kind of makes sense because you did do it in ACN or certainly in your third year if you were a UNISA student. So, it would certainly seem to indicate that they want you to understand changes in degrees of control to the same extent that the CTAs need to know, except for bar one or two things, for example, when you go from, I think it's from associate to cost model or whatever the case is. All right, so let's get cracking. The first thing that we need to deal with is obviously the textbook. This is the textbook, Group Statements, Volume 2. This is the recommended textbook by UNISA. Please note that it is the 12th edition, all right, that you are looking for, not the 11th. All right, so if you have the 11th edition, unfortunately, you're going to have to go out and buy the 12th. And the reason is my understanding, all right, and I obviously can't vouch for this, but my understanding was there was some certain errors in that particular textbook, which was very quickly updated with the 12th edition, all right. So please get the 12th edition. It's kind of what it looks like, green with yellow. All right, and I think the old one used to be purple or something. All right, so that gives you some idea. Let us move straight away to page 114. Okay, so remember, we're now back into consolidation mode. Okay, page 114, and you'll see there example 13.1a, the acquisition of a further interest in an existing subsidiary where the subsidiary remains a subsidiary. In other words, I'm going to buy more shares in a sub that I already have control over. Take a few minutes, okay, read through the question, just stop about halfway through page 115, okay, and then what I want you to do is actually get me, all right, or get yourself for that matter, to this particular point over here. All right, get me to the acquisition part, okay, don't go any further, because if you remember it from last year, great, okay, because it was dealt with actually in the third year. If you can't remember, it's not a train smash, but you should all be able to get me up to there. All right, what you've got there, come back, let's have a look and see how you would actually go about now doing the rest of the question. All right, so off you go and give it a try. Right, so you're back. Now let's go through it and see how you've managed to go. So first things first, we've got share capital, okay, obviously at the top, and we're told that that's 150,000 Rand. Our retained earnings at the date of acquisition was 9. So that's going to give me 154. Please note that I only own 60%, so that's 95,400. All right, my NCIs will be 63.6. If I go back and I check now, what is it that I paid? Okay, you're told that the initial purchase was 95,000 Rand, okay? So, and that comes straight from the balance sheet on page 114, 95 grand. So I've paid less for something worth more. I have a gain on a bargain purchase, 400 bucks. All right, so I take the 400 off there, okay? Taking this particular approach, which is 153,600 and 63,600 over there. Remember, as I said before, the main purpose behind the analysis of equity is to get this guy, all right, the NCIs. This column over here is quite important on occasion. All right, so for your purposes, what I would do is always do it. I would ignore the center column in terms of totaling. All right, you do need lines within it. All right, there's aspects that you need, but certainly not necessary from a total. And that will just hopefully save you some time in the exam. All right, remember again, this isn't about going and making sure that your analysis of equity is the most beautiful thing in the world. Obviously, it must be legible and etc., but you don't have to complete every single line. Okay, you're trying to hopefully get to answering the question, which is do the journals or prepare the financial statements, whatever the case may be.